While we're waiting for Tone, I'm going to ask Greg a question. As I was looking at the turmoil, the volatility in the markets, we are at March 2020 volatility, it looks like. So we have massive volatility happening in the bond market, and Greg's favorite subject, which is the credit default swaps, which is the insurance that you would buy against your positions, look to have spiked to prices we haven't seen since April of 2020, which of course was right after the markets crashed. What do you make of that, Greg?
Well, so credit default swaps, to break it down in its simplest terms, is an insurance product, okay? And when you buy protection, you are buying insurance against the default of a counterparty. So rather than talk today, right now, let's dial back to the great financial crisis.
Which one?
2008, 2009, and that was scary. I was working at a hedge fund that we actually got things pretty well right, and I owned default protection on Lehman Brothers, and I mentioned this yesterday, but I had purchased it from a counterparty who was suspect that they would able to deliver on my insurance, right? So what a credit default swap is again, an insurance product, an insurance policy on a product using a reference obligation that defines a default event. Now, the danger in default swaps is counterparty risk. You all heard that if AIG were to fail, and Jason Brett yesterday made mention of this, if AIG were to fail in 2009, Goldman Sachs was done, right? Goldman had purchased so much protection from AIG and laid that protection off in the market, meaning they could have bought from AIG and sold the protection to someone else. If AIG failed, Goldman was exposed to the other counterparties that had bought protection from Goldman. You can see how this is a house of cards. It's extremely dangerous because contagion is a real thing. And it flows downhill. All right. You can think of, as a high-yield bond trader, I could run out and buy protection on emerging market debt because the two things are correlated. And you can see how it's like whack-a-mole. Emerging market debt guys are getting shredded, so they run out and buy protection on emerging market equities. And it just flows downhill. And this is what the leveraged financial system has brought to us. So fast forward to today, I believe, Mark, and you're looking at a level of volatility that's actually on bond volatility, not credit default swaps. Okay, so it's a different measure, but by that metric, yes, bonds right now are as volatile as they ever have been. Straight treasury bonds. Credit default swap spreads are nowhere near where they were in the March 2020. Okay, now you might have looked at a particular one. There's a very dangerous one that's taking place right now, ladies and gentlemen. It's credit default swaps on global financials. So Credit Suisse First Boston, they're getting shredded. Subordinate debt on all of these banks. The credit default swap index on subordinate bank debt is now approaching levels from 2020. What is happening is the global financial system is gurgling. And when the global financial system gurgles, meaning the credit in the global financial system, equities get flung around like a rag doll. Do not own equities right now if you do not understand what's going on in global credit. Everyone's running for whack-a-mole insurance. What is the most beautiful insurance policy that's ever been created with no counterparty risk? Bitcoin. Yes, it's Bitcoin. How many true financial managers understand that? De minimis. But it's changing. The best report that I've ever seen written by a industry leader is the Fidelity report on Bitcoin. Yeah. Unbelievable. Now, Fidelity is one of the top 5 asset managers in the world. And when Fidelity says something, trust me that the BlackRocks, the Alliance Bernsteins, all of these other asset managers are listening and saying, uh-oh, what does Fidelity know that I don't know? And I better offer this as a silo in my asset management program, or I will lose clients to the Fidelities of the world that have a complete suite of risk management products. So it's coming, guys and ladies and gentlemen, but it's an education process. So many people dismiss it as a risk-on asset, which I described yesterday, and it isn't. It's insurance. And it'll take time, and strike that bingo card again, okay? I'm going to say it 10 times up here. Bitcoin is a long volatility asset, meaning you are short credit. You have sold credit. You're like, credit is a shitty investment. I sold it. And the world is moving in our direction. So trust it'll happen over time. It's not an easy process, but I've lived it in Canada. I was one of Canada's first high yield or junk bond traders. When I started, I had one account. There was literally one account in Canada, and all the rest of my accounts were in the United States. Fast forward 20 years, every single asset manager in Canada now has a junk bond sleeve. The same thing's going to happen with Bitcoin. And the best thing about that Fidelity report, it basically said this. There's Bitcoin, and then there's shitcoins. They didn't quite say shitcoins, but you can read through it's a beautiful report. So I suggest people seek that out.
They also said that they predicted 2 more sovereigns adopting Bitcoin as legal tender this year.
Wow.
When did that report come out?
Yeah, within the
recent.
last month.
Okay, because I haven't seen it. I haven't read it yet.
It's a beautiful report.
Yeah, I know Fidelity, they were on top of it. I mean, they were one of the first Bitcoin custodians for their clients. Right. They spent a couple of years studying this before they went into it. And they know what they're doing.
They've actually, in that report, said they've been mining Bitcoin since something like 2014. So, is it Urian?
Timmer.
Timmer, yeah. Anyway, great guy, really, really wicked smart. He has a price target for Bitcoin that makes my price target of 2 million look like a rounding error. But look, these are targets. They're not limits. They are probability adjusted events, and that's what we're in the business of: is managing risk using probabilities.
All right, guys, this is gonna be an awesome panel, and we got it started early, so we'll have plenty of time for questions. I guess it's intros time. I know we already went into the main topic, and I do want to talk about BlackRock a little bit, but let's do intros. Greg, why don't you just give your intro, and then we'll go down the line.
Sure. So Greg Foss, Canada. I'm a risk trader, but I don't do it professionally anymore. I do it for my personal account. In 2016, I found Bitcoin, and I've been studying it for literally since 2016 and continue to learn from people at this conference, from Tone. Mark Moss and I became the Oss brothers through the Bitcoin community. I have a good friend who I'm really blessed to have met, Jeff Booth, another Canadian, who, by the way...
I tried getting him here.
He wanted to come. I just talked to him a couple... I'm sorry. He's sad that he didn't come.
Yeah.
Anyway, he's wrote the best book I've ever read, honest to God, called The Price of Tomorrow by Jeff Booth. So I'm in Bitcoin. I'm unemployed and happy to be unemployed because, I did retire in 2016. But I'm doing some exciting stuff, trying to help people understand how the financial system works. Working with a friend, James Lavish, we're putting together an education platform, online, free. And I'm a part-time partner at a pretty exciting Bitcoin mining operation in Canada where we have 400 megawatts of power off-grid that we're going to be, amongst other things, using Lake Ontario water at 4 degrees Celsius to run through immersion miners. So lots of cool stuff happening. Bitcoin's going to save the world. Because if it doesn't, I'll use the F word again, we are effed, okay? Like, honest to God, this financial system will not survive another financial crisis. People will call bullshit. And we need our insurance. And my biggest hope is we have a parallel system in place before that happens. I don't want the fiat system to fail, but it will. As Voltaire said, every single fiat fails. Expect it to happen. By the way, Canada will fail 10 years before the USA. So Canada hasn't failed yet. So you guys still have 10 years to get your parallel system in order, but get it the fuck in order, please. I have 3 kids. Thank you.
All right.
Do it for Greg's
Nice
kids.
job.
Well, I'm Ugly Old Goat, and I'm also unemployed. So, and I don't trade for anybody, and I get people want me to all the time. But I listened to. I never met either one of these guys before, but I listened to him speak yesterday.
In the mic. In the mic.
I listened to Greg, right?
Yes, sir.
Greg, and you know what? He's right on. The thing about successful trading has nothing to do with where the market's going. It's all. I call it equity trading. You trade your equity. You don't trade the market. I mean, you learn that first. You don't have control over where the market's going. You do have control over your equity. That's the only thing you can control. So everything has to. That's the number one thing that you have to learn to be a successful trader. It's money management. And you know, nobody wants to hear about that because it's like watching paint dry. But if you've been dollar cost averaging Bitcoin, you have done probably better than the 90% of. Well, I know you've done better than the 90% of the traders. And the whole thing is, but nobody wants that. You know, they think there's magic beans in this thing, and there just isn't. So, you know, if you have not outperformed dollar cost averaging, then you know you got a lot to learn about trading. And I've been in this thing for a long time. Okay. He talked about the most volatile the bonds have ever been. Well, I remember 1980 when we had 20% interest rates. That was way more volatile than what it is now. But that was a different situation.
You were also there for the 87 crash. You were trading at the time, right?
Yes, I was in there for the 87 crash. I actually had 10% of the Kansas City value line at one time, open interest. So, you know, and I've done 11 years in prison, guys, so I've also made some big mistakes. So I'm not talking, you know, out of my ass. I'm talking from real experience. And I don't want, you know, people, I have a heart for the shitcoiners because I think most of them out there don't have any bad intentions. They just don't know what they're doing. And that's the number one thing. So, I'll kind of leave it at that. I bought my first Bitcoin in 2013. I'd heard about it, kind of watched it when it was just a few cents, when it went past $1, and then finally in August of 2013, I started doing my research, and you know I couldn't sleep for 24 hours. I couldn't buy it fast enough. I didn't have any money in the account, so I got it through Coinbase, and they ACH'd my account, and it was check overdraft. I bought my first 10 Bitcoin for under $1,000. And that's the way it works. So I did just finish a book, which I hope you guys, it's for people that want to trade. It's called Equity Trading. That's
Yeah, I want a copy of that book. Save me one.
You got the first copy. It's sitting over the desk
Oh,
there.
okay. That one's mine. All right, awesome.
Yeah.
Hope
Well,
you
no, you have the how-to. That one's not published. It'll be out in 2 weeks.
Oh, that's the
Equity
how-to.
Trading.
Okay.
The how-to is there. I used to be in the gold business, so I am a big believer in. I think Bitcoin is the standard. And I do believe the proper role for government, the gold standard actually emerged like Bitcoin. It was organic. And it came out of not just a reserve standard, but banking. Sound commercial banking came out of the marketplace, and it emerged organically. And then resulted in that Gilded Age, and then they nationalized it. We've had 4 generations of problems. You really need to study that history. I think Bitcoin is the answer, but not for everybody, and probably not for the governments, because they have gold reserves. If we have sound money, you don't need Bitcoin. Bitcoin acts as a governor for the people that are governing you, and you're kind of your escape money. But you know, I think what you're going to start saying is the governments are going to threaten to go back to the gold standard or go back to it. Okay.
All right, we'll talk about that. We'll talk about that. All right, Mark. Let's get your full intro.
Yeah, short intro. Like he said, studying history. I think that's the key piece here. We need to understand history so we can understand the future. I right out of high school, 18 years old, started investing in real estate, coming out of a real estate crash in California. Built up a lot of wealth. Luckily, I was pretty good at making money, but I didn't really understand the financial system. Didn't work out too well for me. I invested through the dot-com boom. At the dot-com bust, 2001, I started an internet business at the worst possible time, but actually it turned out to be a good time. I've been in the internet space ever since. I had a Fortune 500 exit there. In about 2015, well, then in 2008, I got completely wiped out. I was all in real estate in Southern California. That turned out not to be a good thing. I thought I had understood history, but there was pieces in my education that I had a big gap in, and that cost me dearly. So I had to dig back into my education. I became a gold bug. Which later I found out I'm just a sound money advocate, but I became a gold bug. By 2015, I bought my first Bitcoin, and at first, when I looked at it, it was a way to get money out of the banking system. I was very skeptical of the banking system after getting wiped out. And once I bought it, and I went down the rabbit hole a little bit, I said, we actually have a tool we can win with. Like, now there's actually hope. I got to tell the whole world about it. I've been making content on it ever since. I get millions of views a month on my YouTube channel. I have a nationally syndicated radio show talking about Bitcoin. I've been doing a lot of study on history. I've been doing a lot of talks on 3 revolutionary cycles that are converging right now: a 250-year political revolution cycle, an 80-year financial revolution cycle, and a 50-year technological revolution cycle that are all converging right now, which I believe tells us what the heck is going on right now, and more importantly, where we go. The future, the next couple of years are not, they're not going to be easy, but the future's bright. And so, like Greg said, I talk a lot about building these parallel systems. So we saw that was what happened when the USSR fell, like the late 70s and 80s. And that's what took away the communist power, and also it cushioned the blow for the eventual decline. And so I'm passionate about that, and I want to talk about that a lot.
It feels like the war cycle is lining up as well.
So, and I won't be long, but after listening to both of these experienced risk managers, I want to make sure I parlay one thing. I got involved in Bitcoin in 2016, ugly old goat earlier than that, Mark a little earlier, but I stand by this statement. Bitcoin is cheaper now on a risk-adjusted basis at its current price than it was when I got involved at under $1,000 a Bitcoin, okay? So much has changed, including adoption, including the fragility of the global financial system. One thought, $40,000 is a rounding error, and it's cheaper and a better risk trade right now at its current price than 6 years ago when I got involved. Yeah. I continue to add to my Bitcoin holdings because it's insurance against a world that is unraveling far quicker than even I had thought possible.
It's the only anti-fragile thing out there. It is. I can name anything else that's anti-fragile than Bitcoin. It does not exist.
All right, so I got a bunch of topics we can cover. Let's, of course, start with, well, you know what? Let's start with Canada. Since Greg's sitting right next to me. That was one crazy move. With one sentence, the world realized that, you know, wow, people are actually going to pull the money out of the banks. The Canadian on stage, I think that's as important as, almost as important as what El Salvador did. I mean, when people look back at this period, like in the last 12 months, like the reasons to own Bitcoin have never been greater. I've been waiting for the European common currency to break up into its components, and we'll see what happens with Europe, you know, going to war again. And I still think that's coming. I always saw that as like the biggest driver of people into Bitcoin, because like, wait a minute, I have to go back to the lira in Italy, but I still have my euros for another month. Or you see that breakup coming. I thought that would be a huge driver. The elimination of cash would be a huge driver. I saw like those two as the biggest drivers, and you know, crackdown on AML, and Canada is leading the way there.
Yeah, it was scary. Look, I'm a proud Canadian, 5th generation actually. Two side notes. Here's a funny story. I actually am related to the founder of the Fossmobile. The Fossmobile was the first automobile in Canada. It was better than Henry Ford's invention, and actually Henry Ford asked my great uncle to go in business And my great uncle said, nah, there's no future in automobiles. So they produced one car under the name of Fossmobile. But I'm a 5th generation Canadian, proud to have a granddad who also earned the Order of the British Empire, fighting in World War I and World War II. So I'm not leaving my country because it's turning into a very pear-shaped. But we have a leader who doesn't understand math, says things like the budget will balance itself. Think for a second if you were the CEO of a publicly traded company and you made such an outlandish statement. Your stock would go south very quickly and you'd be fired on the spot. But our guy is a drama teacher. He has also said he doesn't care about monetary policy. So he's 0 for 2. I like to say he was born on third base and thought he hit a triple, right? This guy is the son of a former prime minister. And he invoked the equivalent of the War Measures Act in Canada to deal with a peaceful protest, and that's the Freedom Truckers convoy. If you would ask me 3 years ago if within the next 20 years I thought what has happened in Canada could have happened, I would have given you under a 25% probability. And now it's a certainty. It's very scary. It's why we need to own unconfiscatable assets. The Freedom Truckers, whether you support them or not, in my opinion, was about freedom of speech and freedom of expression, and that's what I live for. So I'm being sued. I told you that. I need to be really careful about what I say. I would do it all over again, the exact same way, because we need people standing up for freedom. And these truckers, if you've looked at any of the protests, it was a thing of beauty in their restraint on violence. The most violent people there were the riot police. And it was beautiful, and I'm proud to have put my money or my Bitcoin or my reputation where my mouth is. My granddad and my great uncle would have wanted me to do the same thing.
Awesome. No, thanks for that. All right. I'll let you guys comment. What other global event is coming down the line? For me, the word unconfiscatable, it's not in a dictionary still. You Google the word unconfiscatable, all you get is this conference. The word didn't exist. And I got the idea for that word when I watched the Cyprus banking incident. You remember that? When money was confiscated from the Cyprus banks. And after that, it was, okay, so what other similar events will happen? And now we have Canada, and I'm wondering what's next. Mark, you want to?
Yeah, I think, Vladimir Lenin said that there's decades where nothing happens and there's days where decades seem to happen. And so you said that the Canada event was like one of the most important events. I don't know. It was massive, but I think what we're seeing is escalating events. So around the world, we have currencies blowing up all the time. So Venezuela, Argentina, Turkey, Lebanon, they have massive need to move into Bitcoin, right? We see them scrambling as fast as they can to get into Bitcoin.
The ruble right now.
Well, and the ruble, right? So I'm just kind of like, but throughout the last couple of years, obviously Cyprus 2013, Greece 2015, but then, like I said, Venezuela, Argentina, Lebanon. And so around the world, they've had a massive need for Bitcoin, and they've been adopting it at a much faster pace. In the West, in the US, in Canada, in West Europe, people are like, I don't see any use case for it because our currency was pretty good. In other places, they certainly did. But to your point, I mean, this was a massive catalyst in Canada. All of a sudden, they announced, your money is not your money, right? We can take your money, and they did. There are stories of single mothers donating $50 and getting their bank accounts frozen. Whether that's true or not, I don't know, but lots of people did get unbanked from that. And then again, days where decades seem to happen, and then we saw front and center one of 3 sovereign nations with nukes doesn't even have their money. They got their money frozen or seized as well. And so, I think it's definitely come front and center, but it's escalating at a really fast rate. Once you've opened this back up, you don't put it back in the box, right? So trust is super, super fragile. If you have a business partner, a wife or girlfriend, whatever, you start doubting, and then once that trust is broken, it's gone. And so that's what I mean. It doesn't go back in the box at this point. I think there's no way to return. There's no sovereign nation at this point that could imagine holding their reserves in dollars at this point. Even on top of that, I think it was yesterday, the IMF said that they're not going to swap out SDRs for Russia. So there's just no safe place at all. Obviously, they can go back to gold. I think Tone mentioned a lot of these nations still hold gold. China's, I've added up, is maybe sitting on 30,000 tons of gold. The Fed maybe has 8, and that's probably a big maybe. But how are they going to transact with gold, right? That's really not going to work. So anyway, that's kind of my picture of the world as we see it right now, and it's bullish.
You just like, I don't want to get too political, but you said it's interesting. They froze the money of one of, I think it's a little more than 3 that have nukes, but.
Well, I said global superpower. I think everyone else is like a tier 2 type country.
Freezing all their money. I mean, that. Anyway, it's, what are they thinking?
Yeah, I just want to mention on unconfiscatable, that phrase is how I teach Bitcoin. And basically, that's a fundamental I learned from Tone. And one of the questions I just asked somebody, what do you have that can't be taken from you? And they start thinking, well, my house and my car, you know. And then my bank account, my family, and that opens the door. Now, my view is a little bit different. I hope you're right, Greg. I hope America is the last hope. But boy, America is going to have to change. What we're seeing now is simply a consequence that I saw when I went through the justice system. And that's been gone for a long time in our country. There is no due process. So people are waking up to that, okay? And people are actually waking up by getting these payments up. If they can just put money in your bank without asking, they can close it down and shut it down. America has to be an example. We can't, and that's what we're not anymore. And unfortunately, when it comes to the moral leader of the world, it is not the United States. Putin and Russia are by far the moral leader of the world now. Now, we may not like what they're doing, but as far as everything else, it's pretty hands down. And, so I hope you're right. But it's going to take.
That's pretty debatable right now, Ugly. Very debatable.
I know that. I met a lady in the elevator the other day because I couldn't recognize her accent. I said, "Where are you from?" Russia. And she said, "Everybody is bullying me right now." You don't see that as a problem? I do. We're blaming her as a Russian. Have we really changed? Are we making any progress on this at all?
Can I, as a Canadian and educated in the United States, worked in the USA, had a roommate from college that died on 9/11. Let me just tell you, the USA is still the spot, okay? All due respect. The best thing about the USA is everyone who lives here is trying to say how awful it is and therefore trying to make it better, okay? In Canada, no one even says how awful it is. They just accept it, okay? And that's the truth. The thing, your First Amendment, your Second Amendment, down to your Fourth and Fifth that you talked about yesterday, that is the brilliance of the United States. I mean, that Constitution is a thing of beauty. Live it, breathe it, please do it. And going back to confiscating reserves, Bill Miller, I'm not sure if you guys know who he is, a very famous investor who loves Bitcoin. Bill Miller laid it out this way. I'm taking his statistics. 18% of Russians' reserves were in US dollars and 32% were in the euro, and both got frozen. That's 50% of Russia's foreign reserves got frozen because they are holding confiscatable foreign reserves. Bitcoin will become the global reserve asset of the world when energy is priced in Bitcoin. And it's coming. And Mr. Putin, if he returns to the peaceful Putin, will price his oil in Bitcoin. You watch. As an engineer, the world of conservation of energy, as so eloquently spoken by Michael Saylor, Bitcoin or oil and natural gas being priced in Bitcoin will lead to Bitcoin being the reserve asset of the world. And let's do some quick math. There's $900 trillion of global financial assets. If Bitcoin becomes the global reserve asset, is it crazy to think that Bitcoin could get 10% of global financial reserves? No, right? So what's 10% of 90 trillion? of 900 trillion is 90 trillion, right? What's 90 trillion divided by 21 million? Giddy up. Giddy fucking up, okay? And play your probabilities off of that basis. For those who don't have their HP12C out in front of them, that's over $4.5 million a Bitcoin, okay? My target starts at 2. It's got to go through 2 to get to 4.5, and that's at a 10% global financial asset in today's dollars. Today's dollars. Don't overthink this, people. And anyone who is overthinking it is a horrible risk manager. The mark of a great risk manager is changing their portfolio when the information changes. Bank it. I'll talk to you in 20 years.
The one thing I'll just add onto that real quick is, you know, as humans, we're pretty basic. We're motivated by two things, right? We want to rush towards pleasure and we want to run from pain. So those are the two things, the carrot and the stick, if you will, right? And so like Giacomo said in his talk yesterday, which was great, he talked about the NGU camp, right? That's the number go up. And so that's the... I call it the great bait and switch. People come for the money and then they stay for the freedom. But we have a lot of people in the West typically have been attracted to it because of rushing towards pleasure. They heard about how much money it's making. It's the best performing asset, 200% a year, the NGU, right? So we've attracted those people, and we've kind of started running out of steam on that, but now here comes the stick, right? So now it's running from pain. And so when you don't want your bank accounts frozen, when you still want to be able to provide for your family, the pain now has to get high enough. For myself personally, and a lot of people don't agree, but for myself personally, I like to go to the chiropractor. I believe in chiropractic. I believe that my body should be in alignment. But I typically don't go until I'm in some sort of pain, right? And so that's kind of that pain. And so we see it, and maybe one day, you know, in nations, like I said, in Lebanon, where it's 98% inflation, or in Venezuela, it's 2,500% inflation, their need is high enough. The United States, it was 35%. That's pretty painful for me. A lot of people can sustain that, but that pain is coming, and everyone's going to be rushing in.
Yeah, so it was interesting. So the Russian finance minister actually said they're not interested in Bitcoin, but we'll see what happens in the next 6 months.
I actually saw a report where they flip-flop a lot. They're like China, right? They ban it, then they ban it, then they ban it, and still 10% of transactions in China or Bitcoin transactions take place in China. You can't ban it. You got to manage your risk. Incidentally, ugly old goat, Canada owns zero gold, okay? We sold it all. We were really smart risk managers, fucking idiots, okay? At the end of the day, though, it will be on Canada's balance sheet before I die, okay? That is my belief. And if Canada is a G7 nation, which it is, and is a G7 nation with less than the GDP of California and less than the population of of California, trust me, when it goes on Canada's balance sheet, every single nation below G7, meaning the other 180 nations, will be considering it as well, including some smart G7 and above countries that realize the ECB is built on a house of cards, okay? Deutsche Bank will fail if Russia is cut off from the SWIFT system. And Germany holds all the keys to the ECB. Deutsche Bank is levered 35 to 1. Okay? 35 to 1 on balance sheet and off balance sheet items. Yeah. They're insolvent right now, guaranteed. They're going to get bailed out by Germany, but when that house of cards fails, it will be ugly.
So I'm very surprised that the Canadian dollar and the euro are not depreciating against the dollar. And I've been waiting for both of them. Like, I'm still surprised. I can't explain it.
Well, I have a question for you guys, and maybe I read the chart wrong, but I don't look at the U.S. dollar and Russian ruble. But Russian ruble, the way I look at that chart, just hit all-time highs.
Yeah, it did. That devalued 50%. So the value of the Russian ruble went 2x, basically. So it was like 60 to 80 rubles. Now it went to like 1 something. It's basically a 50% devaluation of your currency.
Okay.
And they raised interest rates to 20% to defend it.
Russia
did. Okay, so let's talk Canada, though. Let's talk Canada. The Canadian dollar should be getting shredded, and it's not. Firstly, people who are taking their money out of the Canadian bank system already had it in US dollars. So what they're withdrawing is US dollars out of the Canadian bank system. And then secondly, and most importantly, there's this thing called interest rate parity, right? Bank of Canada just raised interest rates. That helps to strengthen the C dollar, all else being equal. Now, it didn't jump, but it didn't fall because it offset the pressure of the Canadian dollar that would be experienced on things like bank runs. But foreign exchange is a game of melting ice cube. They're all melting. It's just a relative game. And the United States is melting, but it's going to melt at the slowest rate of these fiat currencies.
Yep. Mark, can you comment on that?
Well, I would say, actually, Luke told me this morning, it's like all the currencies fell out of an airplane and some are just falling faster than others. You know, you got Brent Johnson talking about the dollar milkshake. It's going to suck all the liquidity out of all the other currencies, and the dollar is going to become the strongest. And that's great, cool, but it's still losing value to all the other assets. And so what happens, especially as Americans or even Canadians using dollars, is we look at everything priced in dollars. We had this conversation going last night about real estate and how much it's going to lose value. And it's like, real estate is expensive, right? It's more expensive than 2008. It's never been more expensive. Well, it is when you price it in dollars. But if you price it in Bitcoin, if you price it in gold, if you price it in oil, if you price it in rice, it's actually way cheaper. And so if you look at the stock market priced in gold, we're down almost 40%. So you have to start looking at things in other assets when we're talking about currencies. Yeah, maybe they're getting stronger. The ruble is down 50% to the dollar. Yeah, but so what? Right? The dollar's down. Well, the dollar's a little stronger to Bitcoin than it was, a couple months ago. But
yeah, it's another surprise. The price of Bitcoin, with everything that's going on, and the charts are not looking that strong. And I'm a chartist. I still think that we're in a bull market, and we have been since that March crash. It should be higher. I know your explanation that it's just bot trading correlated to risk on assets, but if you want to elaborate on that, and then we'll get the other guys' opinions.
No, the biggest thing that it has is a cash-settled futures contract on Bitcoin, right? I mean, that is suppressing the price of Bitcoin because the correlation traders can short Bitcoin and settle in cash. If it was a Bitcoin-settled futures contract, it would be a much different story. So without the Bitcoin cash settled futures contract right now, I'd say Bitcoin should be at like all-time highs on a dollar basis. But again, like, I try not to overthink this. I also think it should be at $2 million, okay? Now, it's going to get there, in my opinion, and it's going to be slowly then suddenly. And what are some of the suddenly events that it gets there? Okay, I love charts, but I don't. At the end of the day, it's like driving through the rearview mirror. Okay, no disrespect. Okay,
no,
you got to understand where.
Well, that's why we advise you have a 90% hodl and your 10%, like as much money as you would go to this casino and gamble. That's how much you should be trading with.
Yeah. Okay, beautiful. So here's what where we're going with this. Okay, so when you manage money, it doesn't matter what you do during the quarter. It's how you end the quarter. And the price doesn't matter. If you need to show your clients that you have 1% Bitcoin on the books at quarter end, you just buy it with both hands, irrespective of price. Because if it's going to be 1% of your entire portfolio, that 1% is going to not knock you off track in a global competition. Watch when Fidelity gets 1% at quarter end, and then BlackRock, AllianceBernstein, Parity, and all the big asset managers in the world, Ontario Teachers, okay? Here's the funniest thing. Ontario Teachers, big pension fund in Canada, they're not buying physical Bitcoin. They're buying fucking Celsius network. I mean, is this retarded or what? Like, I'm not supposed to use that word. I apologize, okay? But, like,
which one,
fuck.
Celsius?
You know, no, yeah. So, but here's the funniest thing. They won't even buy the physical. But look, month-end race to portfolio painting. There will be a gamma squeeze at the end of one of these months, and things don't come back down, okay? But that's a future forward-looking thing. The world is so short Bitcoin right now because who's short it? First of all, everyone who doesn't own it is short. That's irresponsible. But other people that are short Bitcoin, correlation equity traders, and even people like shitcoiners who are trying to play the beta between the shitcoin market and Bitcoin. They can short Bitcoin using Bitcoin futures. And then this is where the big picture comes in. And this is concerning but true. People who trade Bitcoin mining stocks can be short Bitcoin as a hedge. And look, all of these things line up mathematically. And your model will work until it doesn't. I'll speak to you in 20 years. Okay? That's all I can say.
Oh, Ugly, I know you loved what Greg said, because you and I did an interview in 2017. I think it was the first time I had you on my channel, and you and I debated, and I see it differently, but Ugly is in 100% agreement with you. The cash-settled Bitcoin futures keep the price down, and my view has been the cash-settled Bitcoin futures are more like the S&P 500 Bitcoin futures that don't have as much effect on the price as people think. And Ugly is so now it's 1 against 2. Maybe I'm wrong.
Yeah, I really don't.
Maybe I'm totally wrong.
I know that the ETFs are not bullish. I've always said, look, until you have a cash deliverable Bitcoin, and that's not what CME offer. Okay, so I don't want to go into that debate, but let me, because he's right on, but let me add a little bit here, because you know, one of the things that's been going on, that we got two things hanging over Bitcoin. Number one is this shitcoin market that's dragged us in. But there's other things too, guys. I wrote articles this last year why institutional Bitcoin investing is, you're putting Bitcoin on the legacy markets. What are we doing? But let's forget that. We also have some of the best educators. Michael Saylor's put out some great stuff. He's really educated people. But boy, you better listen to him carefully. Because he's saying, yes, you want to borrow your Bitcoin. You want to borrow the dollars to buy Bitcoin, but you have to borrow it correctly. You can't, and most of us cannot do that, because the way he borrowed it was through the legacy system. He sold stock, he sold bonds. If Bitcoin goes down to 14,000, his stock goes down, and he still has the Bitcoin. The same thing happened for you? No. That's what we're facing right now. And we have a lot of people that I know personally. They thought they could borrow against their Bitcoin and not have to work, because their Bitcoin's going to 120,000, and I'm just going to make money off of that, live off of that, and hold my Bitcoin. Well, guess what? It didn't work that way, did it? That's not how Bitcoin works. That's what building is. We can't just rest on. Bitcoin is a useful tool. It doesn't build a damn thing. You build the stuff, and that's what we have to do.
That's a good point. The one thing I would say, though, to everybody out here is that if you have debt that you're not paying off and you're buying Bitcoin, you are sort of leveraging your debt for the Bitcoin. Obviously look at what that debt is. So per Michael Saylor, I mean, he's borrowing it almost free. Ray Dalio has been saying, cash is trash, and Ray Dalio is also advising to take out debt, in dollar-denominated assets. But it depends on what that debt is at. If you have I just recently locked in a 30-year fixed 3% loan on a piece of property, an income-producing property, and it's like, do I think inflation will be more than 3% over the next 30 years? Seems like a pretty good deal. But if it's 17, 18% credit card debt, you have to think about that differently.
Yeah, don't over-leverage yourself. And let's talk about Michael Saylor. First of all, he used all available tools. His first tool was what's called a convertible bond. And don't get mixed up on the coupon on the convert. The convert is all based on optionality of the underlying equity. So his convert was struck at a zero, almost a zero coupon. That's not really his cost of debt. His real cost of debt was 6 1/8 when he went to the U.S. high-yield bond market to fund himself in a pure debt deal, not a convertible bond deal. But even Saylor understands the necessity to have the cash flow to service your debt, right? You don't want to be called out of your loan at the most inopportune time. And that's what always happens, right? You always get called out.
Never be a forced seller.
Exactly. So borrow money responsibly, but borrow it at low rates. Never use credit card debt. Always pay off your credit card debt, but lock in term funding. Saylor, I was on a Spaces program, or Twitter Spaces with him, and he was really funny. He wanted to play Jeopardy, and he had all these different categories that I would pick. And so I was trying to flip the tables on him and say, hey, Saylor, what would you really have issued your paper at? Like 6 1/8 is the number the market gave you, and they incidentally came with price talk of 6.5%, and then it showed the demand. They were able to walk down the interest rate and actually increase the price, the size of the deal. He wouldn't answer because he's a responsible CEO, and his answer was, well, if I issued it too high of a coupon, meaning like a 10% when the high yield market itself yields 4%, so 600 basis points over the regular market, his equity holders would have said, what the hell's going on here? This guy's a distressed borrower. Like, things can't be as rosy. So he did the responsible thing. Off the record, I'm confident Saylor would have issued at 10%, okay? Why? First of all, inflation, reported inflation is 7 and something, and if you measured inflation using the 1980 formula, it's over 15%. Saylor's no dummy.
If you use inflation in the real Austrian metric, which is how much has the money supply increased, then you're at about 35%.
Okay, so there you go. All this being said, you're supposed to borrow money today, as I said yesterday, responsibly. You borrow money when interest rates are low. As long as you service that debt responsibly, turn that $100 that you've borrowed today and you owe it back in 10 years, what's the value of that $100 in 10 years? It's like, I don't know, less than 65 cents, isn't it? Or $65. Fuck me. That's what you want to do. That is the simplest mathematical financial decision that you should be making. Borrow $100 today, pay that $100 back in 10 years, but the value of that $100 in 10 years is $65. Do it responsibly, please, for your kids.
So let's stick to the interest rates. So do you think the Fed is going to significantly raise the interest rate? And what would that do to, well, we care about the Bitcoin market, but the overall market as well? No, so Mark.
We find ourselves in a horrible situation where we're trying to somehow read the minds of a few people in Washington. And what they decide to wake up and do tomorrow has massive implications for our lives. It's a shame that, you know, booms and busts are created by them increasing the money supply and lowering interest rates, and then busts are when they suck the money out and they raise interest rates. And so that's a sad reality of where we're at. So anyway, back to the question, what do I think is going to happen? Well, I'm not really good at mind reading, but I would think that, first of all, I mean, there's pretty much just no way they can do that without imploding the system. I think a lot of us were saying that, I've been saying that I don't think they're going to raise them anything meaningful. So, yeah, maybe 50 basis points, something like that. But I don't think there's anything meaningful coming down the pipe. I think that now this Russia-Ukraine war is providing perfect cover, so they're already starting to walk that back. Now, what would happen if they did that? I mean, we'd have to start discounting equities based off of the future cash flows because of that interest rate. So as that interest rates climb, a couple things happen. One, we'd see equities fall. But on top of that, money is created. We talk about money printers. That's not really being printed, right? So the Federal Reserve issues reserves to the commercial banks. The commercial banks create the money into existence through lending. And so when interest rates come down, we borrow more. I locked in a house at 3% interest. If it was 4.5% interest, I might not have bought that house. And so that money wouldn't have been created into the system. And so interest rates rise, equities fall, and new money creation also falls at the same time. And I just don't see it happening. Back to the question, I don't see it anything meaningful anyway.
Ugly, your thoughts?
Yeah, well, I went through, you know, I remember very vividly what happened, you know, in the 1980s when you know, the Reagan solution was to raise the interest, and it worked. In fact, it worked.
Closer to Mike.
It worked. You know, it gave us this generation that we had of growth. But, you know, I always, you know, coming from that point of view of thinking, I never could understand how can we possibly have these low rates and actually, you know, even though you have almost a negative rate in real terms. That's the problem that you have when you have a Fed. This has been going on for 4 generations. This is the thinking that has to start over again. So I'm not going to be concerned with that. I'm taking a whole new approach. My year this year, my intention was to become an arbitrator of Bitcoin between nations. Well, the only way I can do that is I got to play some legacy system game that I don't want to be in. So, in my estimation, the solution is not coming from the top down, and maybe this panel disagrees, and maybe you do, but rather we got to do this thing from the bottom up. I think we
100%,
have to-
100% agree.
I think we have to relearn what banking is. I think what my mentor, E.C. Harwood, wrote, he said he called it the lost art of commercial banking, and we lost it. We don't know how to create, each of us can create money, not ex nihilo, but you can create Bitcoin so long as it represents new wealth coming into the market. That self-retiring commercial paper, that grew up, that was organic, just like Bitcoin was. And then we nationalized it, and that's where we are now. So I want to focus on getting it back and not what these guys are going to do.
Back to the question, the Fed raising rates. So they're leaking information out through Goldman Sachs, and they've said they're going to raise 7 times. Now, don't forget that they typically go by 25 basis points at a time. It'll be interesting to see if they come with an 1/8 of a point increase or a 5 basis point increase. Okay, so let's understand that we're talking 7 times at least 25 basis points, and they could do 50s in there. Okay, pure math. They ain't raising meaningfully. As Mark said, you cannot support the debt spiral. As I walked through yesterday, at a 3% coupon on the debt in the numerator, your global economy will never keep pace with the organic growth of your debt. Organic growth of your debt. That's with interest rates close to zero. When the Fed raises, and they'll probably try and raise 25 in March, and you'll see the equity markets puke, and then the Fed will walk it back and they'll blame it on Ukraine. I think there is a very low probability, in fact, close to zero, nothing's ever certain, close to zero that they institute 7 rate hikes, okay? It just ain't happening. The math doesn't support it, and the equity market will get crushed. And when the equity market gets crushed, pension funds, which are 60-40, have no returns coming from the bond portion, which is the 40% right now because interest rates are at all-time lows. When I started trading in the 80s, yes, 10-year rates were double digits. That's when you could put money in bonds and actually get a return that was meaningful. But bonds are a fixed contract. They're only math. That's why I love them so much. You can't mess around with the math. There's no subjectivity to it. So I don't think the Fed has the ability to raise rates without crushing the equity markets, which puts all pension funds in the U.S. in an unfunded basis, causes an uprising by everyone who's counting on their pension funds, and then Biden whispers to the Fed and says, look, I'm not going to get elected if you don't, and there's supposed to be a separation of the two, but there isn't. My God, you guys got a lawyer running the Federal Reserve. You've lost the plot, people. A fucking lawyer. He's never sat in a risk chair. But when the equity markets puke, he will understand that he's going to walk it back, and we're in QE infinity, okay? QE infinity, which means fiat currencies debase on an accelerating basis forever, and you need to own hard assets. And for the record, I own some gold. I also own real estate. But the best hard asset ever created by man is Bitcoin for its portability, transferability, unconfiscated ability. But I don't manage risk by being all in on one trade. It's just not how I was brought up. And I'll restate this. And I don't need to be 100% in Bitcoin to participate in the beautiful asymmetric upside. Asymmetric trades define careers. Define your career. This is the best asymmetric trade opportunity I have ever seen. Not 100% certain, but you got to play the odds, much like you play the odds on the, out in the casino.
I would like to add something to that. So I think, we're talking about would they raise rates? Could they raise rates? If they raise the rates, they crush the market. They can't crush the market because of the pensions and entitlements and on and on and on. I think we talk a lot about can they get a soft landing? Can they keep the markets from crashing? All these different questions. But I think we have to sometimes look at things a little bit wider and check our own personal biases and maybe ask ourselves, do they want to keep the markets from crashing? Which is a question to ask, right? So we see on a long-term debt cycle, like Ray Dalio talks about, like an 80-year debt cycle, that's about what they last. We saw about 80 years ago, we had a global reset of the financial system under the Bretton Woods Agreement. The entire system was reset, and we saw the IMF come out publicly and say they're calling for a Bretton Woods 2. So that's a global reset. Of course, Klaus Schwab wrote a book called The Great Reset. We know that there's a regime change happening. We know that CBDCs are coming. And so how do they reset the system per what they're calling for, the IMF calling for the Bretton Woods II agreement, or a new Bretton Woods II, reset the global system, put us onto a new system, install a CBD system? How do you do that when we have debt all-time high? How do you change out the currencies? Well, I mean, to think about it, from different viewpoints, I mean, potentially there might need to be a crash in order to switch to another system. But that's probably a rabbit hole we can go down.
And the war is
it's always war.
Gives them another out. Yeah.
I think the one agreement is it's all Bitcoin. That's the thing that's independent, and there's no argument there. I think that where the contention is within the Bitcoin community is, I'm very worried about the transition and how people really are embracing putting Bitcoin into the legacy system. Tell me why. I mean, I'd really like to hear, why would you want to do that when my view is if you have Bitcoin on, whether it's, I trade on the exchanges. I have Bitcoin on the legacy system, but the counterpart, I trade on the exchanges, but only a very small part of it. How is that not unconfiscatable? It is. Why do you want Bitcoin in your IRA? That's, why you completely defeated what you have Bitcoin for. And we're working again, and yet the short term, this is good for Bitcoin, it'll make it go up. Gosh, you got to think about what we're doing, guys.
So with all due respect, I don't want the fiat system to fail. I want to help develop a parallel system that will allow an orderly transfer. And when you develop a parallel network and you create a network transfer, you don't turn one system off, right, overnight and say, okay, we're going from MS-DOS to iOS, right? You run both of them in parallel for a while to make sure that they work. We want Bitcoin to succeed because we know fiat will fail. But there is an outcome where the U.S. maintains global currency status, reserve currency status, and Bitcoin is the reserve asset of the world. And that's a world that I want to live in. I don't want this world where I can't hold Bitcoin on an exchange because I'm worried, or in an IRA, or in the case of Canada, RRSPs or tax-advantaged accounts. You're supposed to take advantage of those. That's why you have RRSPs and IRAs.
Take advantage of them, but understand your risk.
Risk, but listen, guys.
Constitutionally, Bitcoin's not legal tender. Constitutionally, which you respect, and I do too, it's gold. So let's make gold legal tender and keep Bitcoin out of it.
I'm going to draw on Bitcoin's a nice shiny rock. Excuse me, gold is a nice shiny rock, and I own it as well. Thank you to the crypto couple over there. Fuck people. This is about a new transferability, portability, and actually a technology that is more valuable than a 2,000-year-old soft metal.
So why do you need the legacy system to do that? I don't need it to transfer it.
I have three kids. I have 3 kids, and I want to live in a world that is peaceful. Bitcoin stops.
Let the governments have gold.
Fuck the governments. At the end of the day, this is about not having world wars. You know why world wars happen?
Then don't nationalize Bitcoin. Don't make it legal tender.
With all due respect, I disagree with that because I believe Bitcoin will offer the incentives to avoid these types of wars.
This is where the battle's going, guys. And you need to figure
Hey
out
guys, let's get some questions for the audience as well. So if you have a question, there's a microphone stand right
there. While they're
there.
walking up, I would just say, in regards to both of those positions, Bitcoin is money for your enemies. Bitcoin is a protocol that everybody can use. We have no control who uses it. So maybe, like old Goat is saying, Ugly is saying over here, maybe we don't need to encourage them from using it, but they're going to use it. It is what it is. And
but why give it to the lawyers by calling it legal tender?
Right, yeah. But to Greg's point, I mean, if there's tools available, like if you want to invest in Bitcoin through your IRA because you think it can grow tax-free, I mean, good luck with that. Understand what your risks are. As I made the case in my talk yesterday, I think the single biggest attack vector is custody. So you give up custody, you may not get it back. Also, I'm not a big fan of deferring taxes because anybody think taxes will be lower in the future? But that's another subject.
Taxes are not even worthwhile now. You could tax us to oblivion and still not pay down the debt. It's pure math. Like, we should actually stop paying taxes right now and understand that bonds are worthless and start start going with the 60% of the pension assets and the 40% moves into other alternatives. But listen, look, I'm a freedom-loving citizen. I respect this. I don't want to live in a world where you have to live in citadels and whatnot, okay? I love the freedom that America offers.
Surfer Jim.
Yeah, you guys are smart guys, and I really appreciate everything you've said. I'm losing my voice because it's so much fun to talk to everybody here. But Greg, regarding fiat currency sticking around to be currency and Bitcoin being the reserve asset that backs that up, we all know about the Lightning Network and the ability to use Bitcoin like current cash systems are today. Do you ever believe we could get all the way to Bitcoin and get rid of the dollar totally and the parasites who run it?
Great question, and this will be an opinion. You need a certain level of government, and I'll call it interference or Fed Reserve interference. It's the way they smooth out. And don't forget, they believe they are helping everyone. We know they are punishing the less privileged with what the Federal Reserve does. But in the short term, look, I lived through the great financial crisis. March 2009, I rode the train. I was certain that the world was over. I mentioned this to you guys. The Fed did what they needed to do, and thank God they did. Now, they had to do what they did because they created all the problems prior to that. But the Troubled Asset Reserve Program, TARP, was a solution that I didn't want to have to live through the non-TARP result. It would have meant neighborhoods in my neighborhood perhaps being overrun because that's where, you know, the privileged people live versus the underprivileged. I, again, want a parallel system. And this is Michael Saylor. This is not me. The U.S. as reserve currency will probably be the only fiat that exists, and you'll have Bitcoin and U.S. dollar fiat. And the United States, once again, comes out on top, as you should. You're the smartest, most powerful, and most free nation in the world. And all other fiats, see ya, gone.
I'm actually on record that the U.S. will not be a single country by end of this decade. I think there's going to be a split, maybe even multiple, like somewhere between 2 and 5 countries.
Yeah, I think by the end of the decade, we start to see the big nation states collapsing. But back to the question that Surfer Jim asked, and do we think that Bitcoin could be the legal reserve and using Lightning and it could replace the dollar? The one thing I would say back to, and even what Ugly was saying over here about not taking it to the legacy system, is that technology can already solve a lot of problems that we have. It's the laws that are preventing that. So, for example, like owning equities is very messy. There's about 6 or 7 people in that chain. Having them tokenized, I could buy a house with Bitcoin. That should be very easy, but we have to go through the legal process. And so back to legal reserve status, we have taxes that have to pay. Every single Bitcoin transaction is a taxable event. And so we can solve a lot of the problems that we have, except for the government is standing in the way. And so, unfortunately, in order to get to that new system, the government has to get out of the way. And so at some point, it has to go through some legal process.
Well, one thing you mentioned lots of phrases that we're just in total agreement with. Greg is talking about he wants a smooth monetary transition. I think that's what that's what I'm shooting for too. That's what we want. And as far as the legal mechanism that's already there for the United States, it is the gold standard. And the thing that I see Bitcoin becoming is actually the governor to make the gold standard work. It will keep it honest. And because that's your escape. Now you can go between multiple jurisdictions. If somebody has sound money and they're operating their gold standard right, you're going to put your investment, you're going to invest in that jurisdiction and not this one over here that's not doing as good a job. This is the purpose of Bitcoin. Bitcoin will act as a governor over the governors, and it's completely independent from those governors.
All right, let's get one more question in.
If now is the right time to borrow to buy Bitcoin, and you manage the rate of interest that you're borrowing, what are the other right ways to borrow or to buy Bitcoin with debt? Is it anything besides managing the interest rate that you have to pay?
I'm not a huge fan of advocating for borrowing money to buy Bitcoin. I think if you want to do that, but I did make the case that if you have other debt you're not paying off and you're buying Bitcoin, technically you're doing that. So for example, I just mentioned I just recently bought a new property, 30-year debt at 3%. I could have paid cash for that, but instead I took a loan and then I just bought more Bitcoin. So technically, I guess I am buying Bitcoin with a loan. So there's different ways to look at that. But back to kind of the point Greg made, we're all in different situations. The main thing you have to be aware of is do not be a forced seller. That's what crushed me in 2008 in real estate. I was forced to sell. If I would have held onto my properties through, I would have been okay, but I couldn't. I was a forced seller. So, when you talk about Michael Saylor and what he did, his company throws off $30 million a year of free cash flow. Even if he lost 100% of that money, he'll have $30 million at the end of the year. So that's a pretty good situation to be in. I'm not in that situation. So you have to kind of ask yourself, what is the risk of me taking on this loan? Can I service this debt? Let's say there's a 2-3 year downturn in the economy and you lose your job. Can you service that debt? And I guess that's just a personal question you have to ask.
Yeah, great question. Again, echoing Mark, you gotta borrow responsibly, right, and manage your risk. So the other risks, I'm gonna play devil's advocate here. Will your bank freeze your bank account? There's an old expression, right? You borrow $1 million, you don't sleep at night. You borrow $100 million, your banker doesn't sleep at night. Think about this. You owe the bank money. Are they going to freeze your bank accounts? Just want you to think about that for a sec. Okay? It might be a reverse attack vector. But then coming back to, so responsible borrowing. And by the way, if you don't want to borrow, don't. Understand it's the cheapest it's ever been. But if you're not comfortable borrowing, I'm not telling you to do it. I borrow. Why? Because it's cheap. I also have assets that I will liquidate before I ever have to liquidate my Bitcoin. All right, so I'm in that business, risk management. I want to come back to something that Goat said here, and this is going to be true. You guys are privileged United States citizens. You got to start thinking about citizens that live in countries that aren't as privileged as you, that need Bitcoin way, way, way more than you guys need it. Okay, so we talk about the USA needing Bitcoin. Trust me, there's 180 other countries out there that need it way worse than the USA does. Okay, and that will cause the price to go up. And rightly so.
The problem with that, though, is he's right. And I mentioned Lebanon, Turkey, right? Obviously, we know Argentina, et cetera. The problem, though, is that you need to get it before you need it. You need to dig your well before you're thirsty. And so when they started freezing all the Canadians' bank accounts, it was too late. You see in Russia, there's lines at the ATMs. By the time you got to get in line, it's too late. And so think about that.
Yeah. All right, last question. Yes. Really quick answers. Yeah, because we've been on stage for over an hour.
You've talked about taking on dollar debt to buy Bitcoin. How about taking on debt in weaker currencies to buy Bitcoin?
Interest rate would be higher. It all kind of evens out.
Yeah.
In my quick opinion. Like a lot of foreigners borrow in dollars for the lower interest rate, which that's what a lot of it all evens out. Like I always tell people, it's a good question, but I tell a lot of my friends, they're like, well, I borrowed in dollars because it was like 3 or 4%, and in our own currency it was like 8%. I'm like, you should have borrowed in your own currency. It's going to devalue more than 8%. So a lot of people make that mistake, but. Yeah, you could be better off borrowing in a foreign currency because they'll probably devalue against the dollar. But the bank could then redenominate your loan. They can do it, right? Just like Canada started taking away people's money, right? A foreign country can just say, yeah, now you owe that same percent, but now we have a new CBDC. But like, you may not get that canceled. Like a lot of people think that they're just gonna get their debts canceled. Yeah, it's not going to be that easy.
Yeah, when gold was seized, nobody knew it was coming. It was just done. And that's where, if you have Bitcoin in your legacy account and you're trying, that's, what good, you're not, when the day comes, we're going to tax it 30% or we're going to socialize it. That's the battle we're fighting. We need to get rid of that. Bitcoin brings back freedom. Bitcoin can restore our Constitution.
Those in Russia that borrowed U.S. denominated debt at a lower interest rate, instead of a higher interest rate in their debt, well, their currency just devalued 50%. Had they taken on those loans in rubles, it would have been an advantage instead of taking it on in U.S. dollars.
My experience, as I mentioned, I started at the Royal Bank of Canada in 1988. The reason that all the South American countries defaulted and lesser developed countries is because they did borrow in U.S. dollars, and therefore their currency got crushed, and the interest expense that needed to be paid back in U.S. dollars was impossible to service. So look, there's something called interest rate parity. Look it up in your economics textbook. It defines what a currency will do in relation to the different interest rate spreads of the various countries. It's a game. Don't get caught in the game. Don't overthink it. That's basically
And
what
also in the case of Russia, if they are removed from SWIFT, then they have no one to pay that loan as well. If you borrowed in dollars from a foreign bank, it works the other way too. Russians can't pay back their loans because they're not allowed to.
Okay, last question.
All right, real
so
quick.
there's like tax incentives, like in opportunity zones. If you have a big equity portfolio, you can move over to that. Like, I believe there's going to be tax incentives for Bitcoin, and I'm excited one day to sell a little bit to like get cash flowing real estate and enjoy life, get time right. Where do you guys see tax incentives coming for Bitcoin? What time frame, and where do you think they may be if America wants that capital to be allocated in our country?
I don't think that's coming at all. If anything, I'm more worried that the tax like beneficial retirement accounts are not going to be beneficial anymore. I don't see America going in that direction. El Salvador is going in that direction, but the Western countries whose financial systems and political systems could be collapsing, they're coming for that money. I don't see them creating tax advantages for Bitcoin.
Our lack of care of infrastructure is just going to continue, I guess.
Well, I think what he's talking about is like economic zones that have special tax treatment, and so you hear all these, AOC talking about the rich use these tax loopholes. They're not tax loopholes. The government has policies they're trying to put forward, and if you help them, they give you tax breaks, incentives to do that. And so, hey, we need housing, so we'll give you credit for providing housing or economic zones, building these areas. So the question would be, or the answer would be, if the United States saw some sort of like national security issue or interest in securing hash power, for example, and then they could say, hey, if you start a mining farm, you get tax breaks for doing something like that. But I think kind of to Tone's point, I mean, the thought that the U.S. would see this as a national security issue and would really be incentivized to get people to start working in the Bitcoin ecosystem more, while it's a great thought and we would probably leap ahead of the rest of the world if we did it, the chance of that happening is probably very slim to almost zero.
Well, tax code is lobbied for, so I don't think that they come by action or do public policy. There's special interests behind all of them. And I would say, I mean, what we have to deal with is we do have to pay taxes in the jurisdictions. So I'm still a U.S. citizen. I still pay my taxes every year. Because if you agree to do business in that jurisdiction, you've agreed to pay their taxes. Now, does the United States government have the right to tax my HODL that I'm just holding and not doing anything with? They're going to say yes. But isn't that where we fight the battle? That's where we're fighting the battle. When I'm trading, anything that I'm making, yes, I pay taxes on. But if you're just hodling Bitcoin, there's no tax due.
All right, we are over on time. Greg,
Just
last thought.
nothing to add. I just want to do one. Shake my hand, sir. I'm a big fan of you don't always have to agree on everything, right? No. Just discuss it. This is the beauty of freedom of speech. Discuss it. Talk to your councilman. Understand that Bitcoin can actually save, like Cynthia Loomis understands. It can change the world. I really hope the USA doesn't break into 5 different countries. Canada will be broken up first, okay? You'll have the Western Canada. One thing that Trudeau did do, he united the West and Quebec. They both hate him. Who knows, okay? But I really hope it doesn't happen. There's a lot to live for, a lot to look forward to. Thanks, everybody. What a great
Thank you,
panel.
guys.